Hey, it's Elaine. This is episode 380 of the Orange Pill Investor. I had to get my workout on today before the recording, so I'm a little late trying to sneak in before the bell. What's up, Tim? What's up, Strategy? What's going on, Howard? Dex, are we rich yet? When Lambo? If you've been hodling your GameStop for like 3 years, maybe you're finally there. So strategy, sell, sell all my strategy options and YOLO into GME calls expiring 425. Why not just 328? Let's just get it over with. If you only get to live once, let's go all or nothing. I was joking about, somebody was joking about selling some covered calls on GME, but I mean, tell you what, the premiums are pretty good. But let me knock this other stuff out first before we get into degen land. And I guess if they're going to start buying Bitcoin, they have to be treated like a real company. They've, I guess they're a zombie with a chance of a cure. Like maybe there's a cure for this disease. Um, yeah. So I added these covered calls over the last 2 days, and they're slightly in profit. We're down $20, $15 a share, whatever. But these were out to 38 days to expiration when I opened it yesterday. So not really much to do. If I had opened an at the money covered call at 340, then maybe I would think about trying to cover and close these out. But I'm in no rush, really. Now, did I forget to pair these up? I think these must go together. The PMCC3. Yeah, that makes sense. If we were still at 340 or pushing 350, I would maybe add another covered call in here again. So as it stands, I only have 2 covered calls against my 1,000 shares. I've got, let me get rid of this so we can be full screen. Um, yeah, so I'm fully covered on all of my leaps that are in the money. And my Junes are still getting hosed. So I think I'm just gonna wait for, I don't know, wait for some kind of magic to happen over the next 3 trading days. Like maybe GameStop announces a buy in Bitcoin, price rockets up to 100,000. Everybody freaks the fuck out because strategy somehow managed to have some kind of miracle pump, last minute save, buzzer beater to make S&P 500 inclusion based on Q1. But yeah, if we don't get any magic between now and Friday, then like probably Monday, I'll just cut bait on these and I'll just close them all out, take my what, 3 grand or whatever, and dust myself off. Take the holy shit, how much is that? 2,400 each times 10, 24,000. Take like a $45,000 loss on this position, and might not do it today since we don't have that much time, but I definitely want to go over this particular trade because I like to say you have to give yourself enough time to be right, but even this has been open for 100 days. And so when I opened it, it was about at 180 days approximately. Was that make it 186? And so that gave me 3 months for the price to do something good and then exit with 90 days. But you can see that the price of strategy didn't actually trade sideways for the last 90 days. It actually collapsed by what, 20%, 30? Yeah, closer to 30. And so that's just not going to cut it with leverage. Leverage is great when the price is going up, but it's catastrophic when the price is going down. So this is like 90, God, is that 95% loss on all these positions? So making even what seemed like this wasn't like a YOLO degen call here. It was just, buying like a small dip because 100 days ago would be end of December. And end of December was kind of like, okay, it might have been probably around in here. So this is like, oh, that's a nice dip off of all-time highs. So that seems like a bargain. But if we were at 350 when I bought them, and we're probably, slightly under 350 now. So I'm going to lose 3 months of theta decay plus implied vol was still probably fairly high coming off of this spike. So I'm willing to bet, it's just a hunch, that IV has also collapsed from when I bought them. So the price is slightly down, implied vol has collapsed, and I've got 3 months of theta decay here. So unfortunately, even going out 6 months is not like guaranteed time to be right. No, so it doesn't seem like a YOLO. It's like, oh, I'm not just betting on next week's, or zero DTE, seven DTE, something crazy, you know. But still, even in 3 months, there wasn't really an opportunity to take profits here. Maybe here. Yep. If I bought late December, this tiny little pump from 350 to 400 possibly could have taken profits there. Do I have any June 1080s? So Robinhood has a cool feature. Let's just take a look at the Julys because that'll be a fairly similar chart. Yeah, so November. So these 1080s purchased, these are Julys, but it's going to be pretty close to the same profits for the Junes. Late December, if I bought these for, 2 grandish, the only place I could have been in profit was like a week or two later, and not exiting for profit during that early pump in January. There's never been a profitable moment since. The only way that you would have been able to profit off of these was if you timed it just right to get that bottom at the end of February and then like hop back out at the beginning of March. That was the only way to exit these for a profit. So that's a good lesson learned there. All right. Yeah, and I've been trying to dollar cost average into these Julys. I bet you my trade price originally was like 1,500 or 2 grand, and I just keep buying them at lower and lower prices, hoping to get my cost basis down low enough that if we get a pump, I'll actually be able to exit for a profit. That's probably a fool's errand as well. How much cash do I have here? Can't imagine it's much. Yeah, 900 bucks. Maybe I'll come back to that 900 bucks and do something dumb with GameStop. That's MSTY. I'm like right on their heels when we were at 340. So now that we're back down to 325, I'm sure I'm down 15 grand again. All right, let's check the joint account. I added in this covered call. Probably won't consider closing it until it's under 425. Same thing with this one. If it gets down to like 320, and then Tesla. Yeah, I got a poor man's covered call down here as well. I will continue to just every 2 to 3 weeks roll this out. So it doesn't look like, yeah, and no cash. Nothing to do here. My spending account, again, 1080 is absolutely wrecked. I've got 4 shares that are slightly in profit. If I sell them, I think I added those 4 shares because I was tired of the drag on this account having negative theta. But I'm tempted to just grab another oh man, another September 1080. Yeah, we'll see. We'll see if we dip down to 300 or so. I'm kind of guessing, and let's see strategy. So I'm not a big TA guy, but there's an interesting Bitcoin University video from back when it was Trader University, and it was Matthew Kratter was talking about the stock market, and it was when to buy a stock exactly. And I forget the example ticker, but let me see if Tasty Trade makes it a little bit more easy to see. Kind of. How far is this going back? All right, October. So we hit all-time highs. Then we had a correction. We found some support here. And then you got to see some higher highs and some higher lows. And then in this particular example, then there was like a trading range. And it looks like I have to like, yeah, I can't really get it here. But actually, it might be Bitcoin that I'm thinking about. Yeah, actually, sorry, it's the Bitcoin chart. So I was looking at the Bitcoin chart and I thought, okay, we had 94. We bottomed out at 78, something like that. We got some higher highs and some higher lows. We're kind of, um, and then it looks like we're just kind of trading in a range here between 86 and 88. And what he was saying to look for is either it could be some kind of news or some kind of breakout on high volume here after this kind of trading sideways where institutional investors are not allowing the price to dip. I guess this would be invalidated if we saw 84 again. But, if we got a sudden move back to 100, then maybe that clears the way to all-time highs again. I don't trade around things like this. I don't really do price targets, and, just looking at the chart is fun to do, I think sometimes, but I don't really draw lines and look for tea leaves and all of that shit. But it was interesting reminder when I saw this chart and I thought, okay, if we trade in a range here and then we get a gap up, it would be kind of textbook from the video I saw of him way back in the day. So that'll be fun. And if Bitcoin, if we get Bitcoin fuel, then obviously strategy goes along for the ride. All right, let's check the chats and then I'll keep it moving. Magic Pete, GameStop apes in all their cash. Strategy pulls all levers over the weekend. 100K Bitcoin, 4 p.m. Monday. Then ATM, the SPY inflows for the next quarter. That's what I'd do. Sounds like a plan. Howard, I'm thinking that if we don't want to hold less than 90 days and we expect 6 months till next pump, we should only buy 9 months out. Yeah, I think it's probably situational because we had the pump in March and then it took 6 months to, to consolidate before the next move. So I think the time to duration, like if you're still bullish, but you're only like 1 or 2 months removed from a gigantic spike like this, then that's kind of like danger zone. This one's kind of like a little fake out here because it looks like, oh, okay, we found our bottom at 290 and now we're getting higher highs and higher lows. Just kidding. we found we found new lows again. But that's probably just Bitcoin, right? Bitcoin doing what Bitcoin does. Actually maybe not. So we had February 20th, we got another crash. So between January 17th, yeah, January 17th was here. So yeah, Bitcoin just went down again. But yeah, I think it's kind of like, okay, did we have all-time highs in the last 3 months? If yes, then 6 months might not cut it. You might have to go out 9 months to a year or longer. And really, that's even assuming that the 4-year cycle continues and that the bull run is not over, right? So you already have to make that basic assumption that you're bullish for 2025. And so that's the first question, I guess. And then kind of like, if you treat a 20% dip off all-time highs as a buying opportunity 2 weeks after we hit all-time highs, that's probably being a little bit rash. Buying long calls here, probably got to do leaps and go out a year and then suffer through all of this and watch your value crater before you get the next rally. So, yeah, I think I missed selling too much here, but then also was too eager to buy dips way too early. When a stock 4X's in 7 weeks, a 50% correction is should be kind of a reasonable expectation. So, definitely should have waited for more juicy dips and then, buying 6 months from March is probably not that bad, but buying 6 months out from January is premature. I think that's probably makes sense. Deeply. IV trickling up in the IV 30-day, up to 7% from 4% at the start of the week. Cool. It's not really showing up on the chart yet, but I'll take your word for it. So, Kakapo, one thing I've taken as a lesson for myself from the last few months is that patience seems to win out almost always. Yeah, and that's why giving yourself a lot of time to expiration to be right makes sense because you can't have patience on a short dated call. How's it go? Trying to learn patience. I just wish I would hurry up. All right. Yeah, nothing to do here. Can't imagine I'll be placing any trades. And the price hasn't dropped enough for me to take any of my trades off. Now, this is the challenge account. So I might have some things to roll here potentially. This one's still upside down, so there's nothing for me to really do. Just, wait for Friday morning. Even though this is in the money, it's still got some extrinsic value, so let's calculate that. The difference between the current price and actually, there's not much. Let's see. Current price is 300, so there's 28.42 of intrinsic value, and 29.92 minus 28.42 is going to be a buck 50. So there's a $150 worth of extrinsic value. And if I do nothing between now and Friday, then when I do roll, I don't have to pay that 150 bucks. Now, if I did roll the strikes down, excuse me, up to like at the money again, maybe like 335. Oh no, let's just do at the money. If I roll this to 330, I've got to pay that 2 grand of intrinsic value. And then if the price drops back down to 300 again, where my freaking covered call is anyway, I'm just going to be pissed off because I paid that $2,000 for nothing. So yeah, unless I just for some reason had a premonition and I thought, okay, we're gonna finish out at 330. Okay, then I could roll this. Actually, yeah, I'd have to roll it for a $2,200 debit. Yeah, screw that. That doesn't make any sense. So I will just sit tight, and then if I got to pay the 2,800 on Friday to roll this thing, them's the breaks. But I should be fully covered here. Yep, all 9 leaps are covered. Now, I probably should go ahead and roll this one. So I'm basically breaking even. So I'm not rolling this. Um, generally I would roll this when it's down to 20, half of 475, so like 235, 237. But there's only 22 days left on this, so I could roll these out. Yeah, see, 5.9 is still not available. I'm guessing they'll make 5.9 available sometime this week, but by then, I'll probably just be looking at the 5/16 expiration date anyway. But if I roll out to 51 days, which is not terrible, I can keep the same strike for a decent credit, or I could 400 is at the expected move, so that's a reasonable strike. Or I could slide it up to just outside the 1 standard deviation line in case we do get a return to all-time highs or near it by May, and depending on whether you abide by the sell in May and go away, I don't know if it's a myth, but it seems it seems to have some historical accuracy. That would kinda be perfect timing. If we get a pump somewhere in April, May-ish, I would potentially think about, I wouldn't necessarily go to cash. I'm not gonna sell in May and go away completely, but if we returned even to just all-time high levels again, 500 a share in April, May-ish, I would be very tempted to exit all of my leverage. See if we get another correction over the summer, and then decide, do I wanna take, like, one more chance at, at adding leverage for, like, a late 2025, early 2026, whatever, blow off top if we don't get a blow off by May. So I think this is reasonable to go ahead and roll out and up. So I'm gonna be able to increase my upside to 450 a share and capture a small credit. So I'm liking that. I think that makes sense. And let me remember to turn the volume down so I don't blow eardrums out. Let's send it. Of course, I can't get a fill because my trade sizes are so big. It's like MSTY trying to get fills over here. All right, cool. So now I've got 4 grand in cash, but let's see, are there any other positions I need to roll? Oops. Uh, okay, that didn't work. I'll fix that later. I've got 2 covered calls against shares. One's getting wrecked. They're both kind of getting wrecked. And so this one's got 22 days to expiration left on it. So this is has been open for 29 days. This is basically ripe for rolling as well. So in this case, I'll probably just be rolling out for as much upside as I can get without paying anything. So I'm breaking even, and I kind of really just didn't I didn't keep any of my profits. And if I want to compare this to what Misty would have done, is the the 1,500 that they would have gotten paid for making this trade, they would have just sent out as a dividend. But then now that I want to roll it, I've already I've already sent that 1,500 off, and now I can only get paid an extra buck for rolling, for rolling out to 400 days to expiration. Now maybe they would just roll to 350 again, and in that case, I could capture another similar credit, but I think that's pushing it. right? To think that we're still going to be under 350 by May 16th, I think is being a little risky. And even 375 is not to the expected move. So I think this works for me. The tiniest little credit, and I'm increasing my upside by $50 a share. So I like that move. And yeah, the last one that I need to deal with really is this covered call, and I'll just wait until Friday morning. I think even if this is in the money, this will probably be pretty safe until Friday. I could potentially deal with it tomorrow, but as long as I deal with this like before noon on Friday, I'll probably be able to avoid getting exercised. And other than tax purposes, that really just doesn't matter anyway, because I can just turn around and buy the shares back for 328 and, you know, just kind of really doesn't matter. Um, except, just the extra hassle of potentially having to pay short-term capital gains taxes on that if it was at a profit. But actually, I don't even have to worry about that. Potentially, I could get dinged on the wash sale rule because if I end up having these called away at 300, that's actually a loss on my cost basis of $30 a share. And then if I turn around and buy back in, I think if you take a loss and then you buy back in within 30 days, I think that's how wash sale rules work. So that could potentially have some tax implications as well, but it's really not the end of the world. So anyway, I'm thinking I can deal with this no problem. And really, if I was that worried about it, instead of buying the shares back and having to deal with that wash sale rule, I could just turn around and sell a cash secured put and collect the same profits on a cash secured put as I do on the covered calls. So really, that just doesn't bother me at all. Um, yeah, these are basically break even. These are getting wrecked and have been for the freaking 62 days they've been open. Uh, yeah, that's about it. So now all of my 45-ish days to expiration covered calls are rolled out for a profit. The strikes were adjusted, and I should be able to get in that sweet spot of theta accumulation between 25 and 52-ish days to expiration. All right, 4 minutes. Oh, wait a minute, I got a balance here. So the $4,000 MSTY would just send out to the shareholders, right, as a dividend. But I get to, um, you know what? I'm carrying a negative theta here. I'm tempted. Let's just buy shares. So I'm going to try to replenish my shares. With 4 grand, I can buy, let's see, 10 shares would be 33. So 13 shares? Nope, 12 shares. All right, let's check the 5K account with my 2 minutes left, but I don't think I'm doing anything here. Still got my covered calls and my miners. I never took my covered calls off after the blood moon. So I've got 2 covered calls against 2 300 strike longs. And let's see, these 1080s, how big of a losers are they? Yeah, kind of break even. 10% losses, something like that. All right, yeah, nothing to do here. But here's the thing. So if this was Misty, they would have had to have taken that 4 grand in premiums and chucked it out as a dividend. And then presumably the holders of Misty would either spend that money on something, Bitcoin, shares of Strategy, more shares of Misty, do a drip thing. Um, but in my case, I am adding to the overall portfolio size. And it hasn't been a problem for them yet, but when they get wrecked on their strikes and they've already paid out the dividend, where's the money come from to cover this position? Right? So I've got 34 extra additional shares here that I've been stacking, and I've got these 37 1080s that I can tap into when I do get wrecked on a position like this. Also, these Septembers. But in their case, when they've already paid out this dividend, right? They paid out the $1,000. Now they don't have $1,000 to add shares or to add these positions. What do? They've got to pay from their capital. And when the price goes down and this $1,000 prints and they actually don't have to pay to roll it, when the price is down, you would want to go ahead and add back in the shares that got called away, but they can't because they've already paid this out as the dividend. Now, I don't know, did they go out and did they add more shares? I mean, they can't do ATM, can they? Can they just how does an ETF raise capital? Right? Because if I buy a share of MSTY, it's not like Yield Max gets the money, right? It's whoever I bought it from gets the money. So how can they even get like they're taking the 1% management fee, but I'm assuming that they're using that to pay their employees. So they can't use a portion of that management fee to add to their net asset value, can they? Yeah, it seems like the only way that they would be able to raise more capital would be to dilute by selling more shares into the market somehow. I don't know. If somebody knows, please enlighten me. See what's up, Howard. So you're right about the last time, but one of these days it will go down 20% and then double again. We're always fighting the last war. Yeah, that's a good point. And that man, that now that you mention it, that's exactly what happened to me. So I was just minding my own business, being a good little covered call seller, and then March hit me, and I had 300 shares pre-split. Price was 1,200, so in here somewhere. And I sold the 1,400 strikes thinking, okay, this is 20% out of the money. I am good to go. And it went to 1,700. And I'm like, holy crap. So 100 of my shares got called away. Um, and so I was like, I had like some PTSD from that. And so because of that, I didn't want it to happen again. So I didn't sell covered calls as heavily as I should have over the next 6 months. And then I was still fighting the last war when November hit and was kind of like, well, I limited my upside in March and I don't want to do that again because it went to 500, but it can go to 1,000. Like maybe, you know, maybe this is it. So this March rally, the um, the amount of money that I missed out on has affected my trading ever since. And now it's going to be interesting to see how the November event affects my trading. Maybe one of these days I'll get it right. Let's see. We'll be back to 350 by mid-May and spiking to 700 in between. Oh man, I cannot wait until we hit all-time highs again. 750 seems reasonable too because if 250 does seem to be, you know, where we found support again, you know, we've done 2 4Xs in the last year, so a nice 3 to 4X again would get us to 750 pretty comfortably. So I like that call. Okay, so that's your same concerns with MSTY? Yeah, I think they gave me an okey doke because I watched Jay Petrocelli's interview and I was like, "Oh, okay. He's basically kind of just seemed like he was doing what I do, right? Because as soon as I um wait, was it this account? Yeah. So as soon as I got paid for rolling these, right? I immediately go out and I spend the money. And there's a YouTube commenter a month ago that I went to back and forth with, and he was like that bothered him quite a bit. He's like, "Look, you cannot spend that money until they're realized gains." And I kind of disagree with that in the sense that they have 100% chance of being realized as long as I just do nothing. And that's why I say that option sellers get paid to wait and option buyers get paid to act because I sold this 450 strike. I got paid $955 for each contract. It's all extrinsic value. And regardless of the price of MSTR, it can stay the same. It can go to 450. It can go to 750. It doesn't matter. 100% of this extrinsic value will go to zero by May 16th. So as long as I have the discipline to sit here and do nothing, this $955 has been paid to me. And as long as I do nothing, I get to keep it. Um, of course, my goal at around 20-25 days is to roll it and capture more extrinsic value. But if my master plan doesn't get to proceed, the money that they paid me cannot be taken back. Like there's no takebacks, right? There's no takebacks once you sell, once you buy something, you can't just ask for a refund later. Um, Now clearly the extrinsic value in this one has dropped from 1050 to about 150 bucks and um it has added 2850 worth of intrinsic value, but keeping them separate in my mind, all I got to do for the next 2 days is nothing and the last 150 bucks worth of extrinsic value will drain out of this account and then I'm just stuck dealing with the intrinsic value if this thing is still in the money. So I don't have a philosophical beef with MSTY for paying out the premium that they were paid, but it does seem like in their case, since they're kind of like, their thing is about paying for the covered call premium, but if they've already paid out this money and then they get wrecked on a strike like this, right? They got to pay to cover it, and they've already sent the dividends out to the shareholders. So I think this guy's criticism, when he was arguing with me, is valid in that sense because when you're an ETF, you got you got to pay the shareholders. But for me personally, I wasn't bothered by his objection because I can just sit here and do nothing. And if I got to pay this out, and my overall portfolio goes down in the number of shares, um, that's kind of okay because when the price, if the price does dip back down to 300, 275, whatever the hell it is, then I'm going to use the premiums that I'm collecting to buy more shares, but they can't do that because they're just paying the premium out constantly. So I feel like I'm kind of flip flopping and I'm being a little bit wishy washy because I had some concerns about MSTY and then I watched that video and I'm like, maybe he's all right after all. But now I'm kind of coming back around to like, where are they going to get the shares? Unless they have an inflow of capital to make up for the capital that's being eroded, I just don't understand where they're getting it from. So unless they're actually able to go out and sell shares ATM as well and gather some more capital to add into the portfolio, I don't get it. I don't see where they're getting more money from. All right, so the reason you want to use that money immediately is to make more money. Yeah, exactly. Exactly. As a Bitcoiner, if cash is a melting ice cube, I don't want to see it, right? Like I've got $285. That's because, and the only reason I have that is because that's not enough to buy a whole share. If it was, I wouldn't have that. I guess I could go 285. I could almost get like one of these Julys and dollar cost average into this thing. But yeah, I don't want to see lumps of cash here ever. Doesn't make sense to me. Let's see. Are you doing carnivore? If so, what do you eat for breakfast? So I would say 6 out of 7 days a week, my breakfast is steak and eggs. 4 eggs is about 24 grams of protein. I weigh 150. So for um, whether you're on carnivore or not, doesn't really matter. Everyone should be targeting 1 gram of protein per pound of body weight. So that's 150 grams for me, and 100 grams of protein is approximately a pound of red meat. So, for every 50 pounds of your weight, that's a half a pound, or every 100 pounds of weight, it's going to be about a pound of meat you got to eat. Um, so if I eat 3 times a day, that means I got to get 50, 50, 50. There's ways to optimize it, like you want your biggest boluses of protein to be your first and last meals because your your muscle is technically catabolizing while you're fasting, while you sleep. So the quicker you can reverse that, if you're trying to build muscle, the better. So 3 meals a day, you could go 60, 60, 30, 60, or 50, 50, 50, whatever the hell. Doesn't really, that's getting a little bit too optimized probably. The main thing is getting the 1 gram per pound every day. And so 4 eggs gets me to 24. Like a 4 to 5 ounce piece of steak, it's just a small one, will get me to 50. And then most of the time, it's just, uh, 8 to 10 ounce ribeye for lunch, 8 to 10 ounce ribeye for dinner. With, I really like the Manchego cheese from Costco. You got to be careful when you buy places because the ingredients can be shit. But the ingredients on that Kirkland goat's milk cheese seems pretty legit. Um, the was it Kerrygold? Kerrygold unsalted butter. I saw some podcast about if you can get um, some unsalted butters are actually cultures, so it's technically a fermented food. So I use that one to cook the eggs in, cook the steak and tallow, and I swear every time I see a podcast, I start getting paranoid about shit. So I was using the sea salt, and then um, I got scared off by the microplastics. You know, I don't want them to find microplastics in my balls after I'm dead. And so then I switched over to the Himalayan salt, and then somebody scared me with that when they were like, "Oh, but the Himalayan salt's got fucking I don't know, probably heavy metals or something stupid in it." So at some point, you just gotta eat something. So I used unsalted butter, and then I used the pink Himalayan salt to season it up with. And then I guess I probably fall in the 80-20 rule. Like, Sunday, we had date night, so we went to Bubba's, and I got a, spicy habanero burger with an extra patty, which you look like fucking Guy Fieri trying to get your mouth around, a hamburger that big. But, I guess I break the carnivore diet a couple of times a week, occasionally, and eat some crap. I am kind of like I would like to do, like, another strict 30 days, but, man, every once in a while, it's it's just too tempting. Victor, not all unrealized gains are created equal. I feel better spending cash from writing a put than the cash from writing a call. I know that isn't logical. No, it isn't, but, you know, half of trading is mental gymnastics anyway, so so Kagabo says it should be the opposite since the cash you raise from the put can be used to pay for the put, being called away eventually. For a call, that is not possible since you need to put up the shares as collateral. Let's see. Don't think they pay out partial amount of the premium and the rest goes to increasing their SL position as their shares. Okay. I don't know. GameStop drops $2 a share minutes after close. Yeah, maybe I'll wait for them to what is it? Buy the rumor and sell the news. So if you had bought the rumor that GameStop was going to just look year to date, that GameStop was gonna, potentially buy Bitcoin, if you were buying it, I don't know. I guess if you bought it here, you were still kind of screwed. You didn't really make anything off this little pump. Yeah, so even then you had to like buy it at the bottom to make money off of this. I think Grain posted a position where he made some money off this pump right here. But yeah, I mean, just based on the announcement, you can't expect this to go to the moon yet. So if this crashes, it might be worth screwing around. Um, the okay, this must just be after hours because when I was looking at this earlier, the premiums were pretty good. Yeah. Yeah, I don't think the options prices move. So it was probably at the money was like something like this, which is like, I don't know, that's almost 2% for half a trading week. It's not bad. We'll see. They they actually might end up being even a more pure Bitcoin play than strategy. I know people are down on Strategy's business intelligence software, but it's at least something. Like, it's a product that some people want, and it may even become more popular and become even a better product as their company grows, right? Once they're in the Mag 7 and they're, 5 years from now, 10 years from now, they're number 1 or number 2 in the Mag 7. I think it's gonna be Tesla and Strategy 1 and 2. I don't I'm not sure which order, yet, but, um, GameStop doesn't have I don't know, do they have anything? They need to just sell off every single store they have, and then maybe not every store. I guess you can buy, what, little paraphernalia inside the store, but, like, what's the point? What's the point of having a brick and mortar store? Like, if you have an Xbox, you can just buy games from Microsoft. Like, you don't need to buy a game from GameStop and pay a middleman. So, I have no idea what they can do. But I guess my point is, if they just forego their entire business, like, if their business becomes kinda meaningless, they might be even an even more pure Bitcoin play than Strategy. Um, Mining stocks have to deal with the mining competition. Um, Semler's got their medical product line. If if Dell or Facebook, I guess Meta or whatever, if they start buying Bitcoin, it's a bit of a stretch to think that Bitcoin would become the majority of their, uh, forward-looking PE. But like GameStop, if they just went all in on Bitcoin and started issuing convertible bonds, they're already pretty volatile. So, um, Forrest Hodel was did a video earlier today talking about it. GameStop's already pretty damn volatile, and if you just if you just dump a bunch of Bitcoin kerosene on that volatility, that could be kind of cool. Let's see. Jimmy is running the ATM by the dip and let her rip. That would be crazy because I think they already they had ATM approval, right? It would be wild if they were selling ATM before they even bought any bit were like on the Bitcoin standard. Let's see. Just as social media indicating GameStop raising 1.3 billion to buy Bitcoin, about to make some moves. Uh, yeah, man. Have a good day, strategy. All right, so you don't have to worry about the Himalayan salt unless you're genetically predisposed to hemochromatosis. All right, that's a good call. I'm gonna have to Google that one. GameStop has dilution PTSD. No way GameStop moves up until they announce their actual Bitcoin acquisitions. Yeah, they already diluted, right, to raise the 5 billion that they've got. Short vol funds have become incredibly efficient at killing GameStop option traders for 3 years. GameStop made 131 million profit in 2024, a big increase from the year before. Does that include, like, selling off their stores? Because, Force Total was talking about they I think they sold off a lot of stores in Germany and Europe, so are they calling that part of their profits, or are they literally making profits from selling actual products? Brandon, can you educate me a bit on the logic of buying to close covered calls when they're at 50% instead of waiting for them to expire out of the money? Yeah. So this is straight out of Tasty Trades philosophy. And so if I'm gonna continue to try to collect theta from these options, if I have captured um, more than 50% of the profits in less than half of the trading time, then it doesn't make sense to wait the other half to collect less than 50%. So on average, every 2 to 3 weeks, in best case scenario, I would want to be rolling this out, um, buying it back for about half of what I paid and then getting paid the full amount again. And it's just kind of rinsing and repeating. But if the price moves suddenly on you and if the value of this option dropped to 200 tomorrow because strategy dropped to 300 a share, am I really going to hold this for 50 more days to collect $200? Not really. So, um, it comes into play a little bit less with a weekly because it only takes a week for the entire amount of extrinsic value to drain out of that option. But it's mostly for the 45 days to expirations. Every 2 to 3 weeks, you want to be rinsing and repeating. If you can collect more, um, if you can collect the full amount of premium without waiting the full time, then that can squeeze you a little bit of profits out of the trade. Holy shit, they announced a convertible bond already? Badass. You're absolutely welcome, Brandon. All right, so we got a couple of trades in before the bell, and we're all caught up on the chats, so we'll call it here. Be good, Joe.